What is going on, guys? In this new video, I'm going to teach you what is candlesticks, the different types of candlestick that we have in the market. I've spent a lot of years reading candlesticks patterns, the one that works, the one that doesn't work in the market. But I get to understand that about all the candlestick patterns that I've been taught, only few of them are working 90% all of the time in the market. And this is what you're gonna get in this video. This is a video that is full of years of experience, hours of watching so many tutorials, both on YouTube and pet mentorship. So, but before we go into that type of candlestick pattern that I want to teach you, those specific candlestick pattern that I want to teach you, I want to start with the basic. You are welcome back again to FX Pro Trading Community. Let's get into the video. This is one of the candlestick patterns that has been taught by so many mentors. Look at it, the Doji. Normally, I call it the star. Is formed when a market opening and closing price in a period are equal or very close to equal. So whatever happened within the candlestick itself, by the end of the session, neither buyers nor sellers had the upper hand. This is the type of candlestick that we said in the FX community, we call it an indecision market. This is an indecision, is telling us that there is indecision in the market. Why? Because we can see both, there is rejection from both top and bottom. Most of the time, you can see the rejection are almost equals. This is the one. We have the one that has a long wick. We have the one, the upper wick is longer, the one, but we don't use that one. This is the one that we use. The one that we use is the one that we can see that the wicks are almost equal. That I'm talking about the wick of the top wick and the bottom wick are almost equal. So with a very small body, we call it, normally when we see this type of candlestick in the market, we say that there is pulse in the market, there is indecision, something is about to happen, there is consolidation. Market is consolidating, the market makers are accumulating orders. So they are now generating orders in order to expand the market to the further direction. So this is type of market normally comes when there is an expansion, that is a series of up close candles or a series of down close candles, that is there is momentum, and then you begin to see this market came in. This type of candlestick is printed. It's telling us there will be a sort of consolidation coming in the market. The market makers are now in decision. They have reached a price point that neither buyers and sellers are taking control of the market. So the market is in decision. You know, there are 4 market phases. We have the consolidation phase, we have the expansion phase, we have the retracement phase, we have the reversal phase. So these 4 phases of market, I'm going to teach you on this video how you can apply these phases. The market makers buy model, the market makers sales model, how the market makers are generating orders, and how are they liquidating their orders. So every market starts with what? It starts with consolidation. After consolidation, then we have expansion. After expansion, then we may have retracement or we may have reversals. These are the 4 phases of the market. If you understand how to use this concept, how to use this market phases very well, you're going to see how your trading is going to change entirely. But this candlestick is the one that we call the consolidation. This is the phase of the market. This is the consolidation phases of the market. We say all markets start with consolidation. That's why you can see a lot of market makers, ever smart money traders are telling you that Asian session, most of the times on major peers are what are consolidating. So they are consolidating because Asian session, we have 3 sessions that I know. We have the Asian session, we have the London session, we have the New York session. That is, these are the 3 US sessions. That's that. These are the 3 phases, 3 sessions in the trading. So we have the Asian session. So when the Asian session, you see market is consolidating like this. So it's telling you that the London and the New York session, we are going to see expansion. So this is what every market session is. Market sessions start with every market maker buy models, market maker sell models, the models, the way they are trading. So you cannot just start selling something that you don't have. This is why people, you see on session, people will gather they will gather goods So when you see consolidation like this, they are accumulating orders. They are trying to get orders to distribute. So you see, when you're for the production session, they need to what? They need to produce something. When they have something in their store before they go to the market and start selling, this is what we call consolidation. The market makers are accumulating orders to expand, now to distribute. Then the second candlestick pattern is called the rejection candle. I want to take my time to explain these things for you to understand. So people just say rejection on this, but we want you to understand how you can see this. Immediately you see them in the market, you can be able to read and then tell what is going to happen next in the market. This is what we are based in the A1 FX community. We are based in identifying what will be the next market move. So we have the rejection candle. In a rejection candle, what is required of you as a trader is to pay attention to the length of the wick when looking for rejection candles, as it can tell you about the strength of the formation, the strength of the candle. When there is long wick with small body, it's indicating what? Ideally, the wick should be 2 or 3 times longer than the body. So we want to see a little bit a body, not just a small body. Small body with the pin bars. But I'm talking about rejection candle like this. When you have the body, you can see the body, but the body is smaller compared to the wick. The wick is what? Ideally 2 to 3 times the length of the body. And this is a reversal pattern. Entirely, this is a reversal pattern, which means the current sentiment may no longer be strong enough to sustain the trend direction. Where do you want to see this rejection candle? Because we say this is a rejection candle, it's a reversal candle. What do you want? Where do you want to see that? You want to see reversal candle happening at a reversal zones, where there is a reversal zones, where the market maker model has reached a terminus. It has reached to the terminus. They have distributed what they want, they have at hand. Then you can do what? A new phase of the market is going to unfold. You see, I say we have what? We have 4 phases of the market. After consolidation, you see expansion. When you see expansion and then you see rejection candles are coming, what are you going to do now? You're going to know that, okay, we are seeing rejection after expansion. The market is either going to reverse this or is going to retrace. You can see how you can apply this market, how you can apply this candlestick patterns in a proper way when you understand the phases of the market. Understanding the phases of the market, applying this candlestick pattern is going to change the whole game for you, my brother. This is what you're missing. This is the masterpiece. It's not about downtrend, uptrend. Understand what the market makers are doing in the market. Understanding which phase of the market are you. Understanding which session of the market are you. When you are trading the major pace, which session are the major pace are going to trend? Which session are the major pace are going to consolidate? So assuming you are in the Asian session and then the market is consolidating, showing you the previous candlestick that I just showed you. You see in the Asian session, market is consolidating. Then immediately London opened, and then the market now expand. When it expand lower, then it forms what? It forms this rejection candle. It's telling you that, oh, now we're going to see retracement coming into the market, or we're going to see what? Reversals. So reversal, why do we consider reversal and where do we consider that it is a retracement? This is another video for another day. When I'm going to dive in and teach you how you can use this thing, oh my brothers, you just be surprised how your trading just change. Just stick out with this community, stay out in this YouTube, and you can learn a lot of things. A lot of things that you'll be missing. Here is the recipe for what you're missing. So assuming the market just formed this thing, just from this rejection candle after the consolidation, you just wait for what? Expansion, and then you see rejection. And then what you can do? You can, boom, you enter the market, and then the market will go instantly in your direction without anything. Oh my God. Let me go into the, then after the rejection, what is going to happen? Expansion. Because what? When we have what? We have consolidation, expansion, then rejection, and then what? Expansion, my brothers. So this expansion is coming. We call it momentum candlesticks, are characterized by the long bodies and minimal wicks, indicating strong buying or selling pressure throughout the session. If the current institutional order flow is intact, as same is printed in that direction. So when you can see that the market, we are in a buy model, we are in a buy trend, and then you see momentum candles are coming. This is telling you that there is buying pressure coming into the market. So you don't look for sales, you don't look for opposing trend. You don't need to sell the market that is going up, and you're seeing these bodies are coming in. This, we are closing above previous candle, high, we're closing above previous day high, we're closing above previous days. You are looking for buys, look for buys, look for buys until the market maker buy model reached a time. That is, we reach to where all the orders that the market makers have exhausted it. Then the market is going to do something next. Then this is where I'm going to go in and tell you in the next line. They say that if and where this candle is printed against order flow, it may signal market makers seeking willing sellers to buy from. Assuming the market is in a buy trend, the market maker buy model has not reached to its terminus, and then you see, boom, what is coming in? You saw this kind of momentum candle. Let's say we are in a buy trend, and then we see a bearish candle coming in with a momentum candle. What is this telling us? This is telling us that the market makers are seeking sellers to buy from. You see, you can't buy. You can't buy without seller. So the two parties must be there. So we need buyers to sell for. Look, assuming, you see what I just said from the very beginning, we accumulate orders. When we are distributing orders, sometimes, assuming when you go to the market, you have something that you want to sell, you have your store, something new, so you want to sell, and then immediately there are a lot of buyers that are coming to come and buy from you. Then when they are coming to buy for you, and you understand that what you have in store cannot reach to the end of the month, you need to buy more. So this is what these guys are doing, man. When you can see the market is buying, the market maker buy model is going as not the monthly. Let's assume the monthly order flow has not reached to its terminus. Then what are you going to do now? We are going to say, okay, now let us induce sellers to come into the market so that we can buy from them, so that we have enough product on our store in order to distribute to the order. I'm going to teach you guys. This is very simple. I don't know, but the years of experience that I have is the one that has opened my eyes to see all these things that I'm just teaching you now. But I'm going to share all these things for you guys. If you can stay with this YouTube, you can stay in those YouTube channels and watch all our videos. We are coming in for you now. And where is printed at the end of distribution leg, it's signal exhaustion, and we might what? We may see institutions are liquidating or closing their open position. Assuming the market makers buy model has reached to its terminus, the market makers has reached to what? They have delivered to their target. Remember, in market, what we do normally in the FS community, we want to look at where the market makers are going this month. Where are the market makers going this week? Where are the market makers distributing this day? You see, the market can only do two things. The market makers are doing only two things. Price is either seeking liquidity, or price is what? Is rebalancing an imbalance in the market. These are the two things the market do every blessed day, every blessed week, every blessed month, every blessed year. The market do only two things. It either seek liquidity or it rebalance an imbalance. So assuming the market makers are going for an imbalance, and immediately they reach into that imbalance. Now they want to rebalance that specific imbalance. Wherever they reach there, and then you see this kind of momentum candle coming inside that zone. It's telling you that these guys are now what? Are now exhausted. They are now exhausting. They are closing their orders. So market goes and moves. Assuming when you're used to looking at how news are coming into the market, the market works without inputs. Remember when Donald Trump came into the market, what happened? You can see a good rally into the market because people understand that Donald Trump is a buy, is a bull guy. Now it's used to, whenever Donald Trump is the market is a bull trend. So that's why you see a lot of buying come into the market. And now look at how the crypto just crashed. He's telling you what? This is what we are talking about. The market maker, the market works on impulse. So this is exactly what is happening. When you see this kind of long candles, remember, when the buy trend is intact, and we're seeing, when we are in a buy trend and then we are seeing momentum candle printing, the trend is intact. These are the three things I'm teaching you here. Then secondly, when we see the buy trend is intact, we have not reached to what? To the imbalance. We have not delivered to the terminus of the trend. And then you are starting to see this bull candle, their candle, or momentum, their candle coming in. We are what? We are seeking willing sellers to buy from them. So, but remember, when we have already reached to our terminus, what is happening, guys? We are seeing this type of candles. Why sellers? We are already what? Exhausted. We're closing our orders. So that is generally how we use this trick. We use this candlestick in 3 times. We use them 3 times. When the momentum is still intact, we are still buying. When we see an opposing momentum candle coming against a momentum, it's telling us we are seeking willing sellers to buy from. And when we see this momentum candle is coming at the end of the trend, it's telling us the trend is what? Is ending. A new phase of the market is going to what? Is going to unfold, guys. So now let's see, we have the Marabozu candle. Normally the Marabozu, I call it what? I call them the imbalance candle. And the most important one that I use most of the time is the middle one, what we call the Marabozu uphunt. The Marabozu, this indicate inefficiency between the two parties, either at open or at close. This is the type of candlestick. We can see there is no wick. We call it the new wick, no wick candle. So there will be no wick at the opening, or there will be no wick at the what? At the close. You can see the first one, there is no wick in both open and close. This one, you can see them few in the market. They are normally on the lower time frames. So, but when you're going in the higher time frame, you see a majority of them, you can see either no wick at the top or no wick at the open. So, but the one that we use in the FX community is what? The A1 FX community, the one that we use is the Marabozu open. So, imbalance, now we see, how do we do it? Imbalance at open, we don't trade continuation, but rather look for immediate rejection to target it. So assuming the market open today, we are in a buy trend, and then you see a bearish Marabozu open. You see a down candle is coming with that imbalance at the top. So immediately we are in a buy trend. Remember I say you can see this type of engulfing candle. We are seeking what? Wheeling seller. We see this engulfing candle is coming down. This expansion candle is coming with that wick at the top. At the open, it just dropping. What is telling you guys? It's telling us that what? When we see rejection, is an A+ trade to go and buy the market and then target it, the target up. So remember we said there is imbalance, inefficiency in the market. So you are in a buy trend and you have buy side, what we call it, the buy side imbalance. So when you see you are in the market is in a buy trend, it's a buy model, and you're seeing an inefficiency. That is, there is inefficiency. BC, there is inefficiency in buyers. The market is quickly going to feel it, guys. It's going to feel it. So there are no buyers at the top. So what? The buyers will quickly go in and what? And fill the order. Guys, this is just simple, man. I will teach you how to apply all these things, guys. These are the 4 candlestick patterns that we use in the FX community. These are what people are teaching all about. But the way we use them in the faces of the market, like I just explained before. Now, what is going on, guys? Now, after teaching you what other people are teaching, the types of candlestick, and then how do we use it in the FX community? We use it, that is what we call the combo. We combine the candlestick, we combine 2 or 3 candlesticks to give us a high probability candlestick pattern. In the next video, this is where, guys, I'm going to teach you exactly how we do this, guys. Combine 2 candlesticks, you have more than 90% win rate in trading. When you can stick to our rules, you can stick to this candlestick pattern, I'm promising you guys that your trading is going to change. We look forward for seeing you in the next video. What we are giving you, you are what? You are our people. We love you guys, and we are here to satisfy your desires. If this video, you enjoy watching this video and you find it insightful, can you please subscribe to our channels and hit the like and buttons. You can also comment on our comment section, because our desire is to get you to where you want to go. And then you can tell us on the comment section which video or which topic do you want us to cover on the next video. But in this series, I have to finish this one, then I will go into filling in, answering all your questions. Until then, goodbye.